Okay, welcome everyone to the Pro Trade Room Plus, ISM Services and Jolts. My name is Lee Goldstein, Trading Director at 10 Minute Trades. Please remember all the trades we discuss are for educational purposes. All right, good morning everyone. Let's talk about the Jolts report today. Let me just get my sound set up the right way. All right, looks like everything, all the technology seems to be working. The trade room is working. The sound is working. Let's talk a little bit about what's going on today on this report. So we've got two reports at once. We've got Jolts trading with ISM services. And right now, the history, other than one recent report, I'm going to say it again, other than one recent report, trading with Jolts has been a big problem. Jolts itself has become a big problem. It is not a report that has been performing well. It's been whipsaws galore, unfortunately. But it's a report also that does move the market. There's no question that Jolts will probably move gold significantly. And by the way, gold is significantly bullish. If you press indicators, net change display, and put gold on points, gold's getting ready to test the high of the day again. It's been testing it all day. Since I got here this morning, the magnet was long over on most of the instruments this morning. The MNQ I'm looking at, magnet is done. Gold looks like it wants to test the high, but it's tested it so many times. You have to be very careful. It's not a valid magnet anymore. It's done too many tests. It doesn't mean it's not going to test it again, but the risk is higher. So we've got ISM Manufacturing trading with Jolts. There's no way to know what's going to happen because these two reports rarely trade together. They rarely trade together. So that's a problem. Remember what's our purpose here? We really have a purpose. Our purpose is to trade the reports that give us the best opportunity of profit. And unfortunately, Jolts with ISM is a coin toss. I don't know what's going to happen. I don't have a great way to predict what's going to happen. So it's wise, probably in all honesty, not to trade it. I mean, that's the honest truth. It's probably wise not to trade it. If you trade it, then you're accepting the fact that it's going to be ultra high risk. It's just that simple. If you look at ISM and Jolts in December, let's just see. No, you know what? I'm taking it back. It's not December. Jolts traded by itself. Nope. Jolts traded with consumer confidence. Hang on. Jolts in December. Just starting over. Jolts in December traded by itself. All right. Traded by itself. Now, normally with consumer confidence, we often trade a trap trade, but we're not trading a trap trade for Jolts and ISM today. The gold breakout actually looked like it worked on Jolts in December. The ES did not have a tradable move in December. We canceled it, the trap trade. But the gold breakout did have a tradable move in December. That was a recent Jolts that traded by itself and did not stop us out. We've had a lot of stops from Jolts lately. ISM, if you look at the DMM, ISM by its is calculated by itself on this DMM. It's been a trade that overall has been pretty good, but it's not trading by itself. And I'll say this over and over. When Chantal and I have been testing the ISM reports, it has been harder and harder to find really reliable setups for the ISMs. They are not family money trades right now, and they had been family money trades last year. So they are definitely more difficult to trade. So there's no question that you're taking a lot of risk today if you trade. It's definitely a lot of risk. Last month, we had an MNQ breakout that does work on quite a few of the different reports, but it often needs to be managed manually also. And we tried it on ISM last month. And here's what it looked like. Let me see if I can get the right video here. Let me see if at the end of December, we had our MNQ set up. It was a bracket of 40. I'll show you the setup, but let's watch and see what it did. A 150 tick stop. Here's the MNQ. MNQ. And you could see it chopped, it hit the first target, and then it pulled back and stopped me out because I was protecting the first target's profit by moving my stop to safety. Had you not moved the stop, it would have been a better trade on the MNQ. Gold was a pretty lousy whipsaw on ISM last month. Gold did not work well. Gold did not work well. So you could, now the thing is, the ISM, that report did not include Jolts last month. So there's no way to know what the difference might be. Jolts is a pretty impactful report. I'll still take the shot with the MNQ to see if it works because the risk is not so big that you're going to blow up your account usually. Trading the MNQ with a micro, it's a micro. It's not very expensive to trade. It's 50 cents a contract. Now the markets are opening. That's why you're getting all this volatility. Literally going from high to low, going from high to low. So let's say you say to yourself, okay, look, I agree. Jolts is risky. It's not the smartest thing in the world to trade it. If you want to really succeed at this method, you have to be the type of person that some weeks you might only trade 2 or 3 times for real, using real money. Maybe you'll trade WASD. Maybe you'll trade the jobs report, right? Maybe you'll trade ADP, and maybe that'll be it. Maybe you won't trade another report for the rest of the week. That is the way to best approach this type of trading when it comes to the breakouts and the trap trades. What's changed is that we have a lot of alternative ways to trade. Jolts with ISM could be an interesting let's trade after the news. You could look for a reversal continuation. You could look for a magnet. Okay. So you don't have to not trade at all if you're the type of person that must have action. We certainly have enough setups that you could create a trade. But the key is don't take a trade unless it gives you a high probability of success. That's the idea. So, but I will take a shot on the MNQ because it's not so risky that it's going to blow up my account. So I'm going to right click the chart. I'm going to click strategy, double click JOBB version 11. It's a breakout trade. I'm going to activate the trade at 9:59. I've got a bracket of 40. Position 1 is a 1. Position 2 is a 1. That means I'm just trading one contract with each position. I don't know how well this is going to do with Jolts. You don't have to take a lot of risk if you don't want to. I'm not going to move my stop. I'm going to leave everything alone. And my stop is 150 ticks. 150 ticks. And then I'm going to scroll down. I'm going to label the trade MNQ. Temporarily, I'm going to press the apply button. I'm going to go back to the time and set the time to 0 so I could look at the width of my brackets by activating a trade that's on sim at the moment. My account is on sim. My charts are on sim. I just want to see how wide my brackets are for managing the trade. And 40 ticks should be fine. Turn off the trade, go back to the strategy, and now put the time back to 9:59:59. It's very bullish market at the moment. choose the account that I'm going to trade it on. I'll trade it on one of my prop accounts. Put my charts on the account. I need to make sure it's on my tradable account. You can see the market is quite bullish, quite bullish. Now, gold, to trade a gold breakout is pretty high risk. It's $400, $500, $600 worth of risk because it's $20 per contract. It's a 20 tick stop. And we honestly don't know for sure if gold is going to work properly with Jolts and ISM services together. We honestly don't know. So my advice would be to just simulate it. You don't need to take the risk if we don't know for sure what to expect. Now, we never know for sure, but we often have better probabilities. This is an unknown probability. We just don't know. So I'm not dying to risk four, five, $600, even though I know that my prop accounts reset in a day or so. They reset in a day or so. So if I blew the account, it will reset. I believe it's the 8th. I believe it's tomorrow, or it might be the end of the week. I'll check. But I would look at the gold setup. I just don't think I'm interested in spending real money on the gold setup. Also, gold is tremendously bullish today. The trigger time is 9:59:59. The bracket is 15. Position one is a one, position two is a one. That means one contract for each position. And we have targets of 10 and 30. Target one stop move. If gold should hit my first target, I would move my stop to break even -4. The stop is 20. And then I would label the trade BRK for breakout GC, BRK for breakout GC. Apply it, set the time to 0, look at the brackets. When you enable a 0 trade, the software immediately will trigger, right? That's a very manageable bracket. Remember, gold's been testing the high all morning. So the magnet is not really in play. It may test the high again, but it's done so many tests, it negates the magnet. Trigger time is 9:59:59. Bracket of 15. Target of 10. Target of 30. Stop of 20. Break even -4 if it hits my first target. And I've labeled it breakout gold. And I'm just watching gold. All right. There's too much risk for this report because we don't know how they behave together. The other instrument that we use to trade on this report would be bonds, ZN 0325. And I know that there's all sorts of malarkey going on with the top accounts where you can't trade bonds. During Christmas, they told us we can't trade corn either. What's next? Are we not going to be able to trade soybeans? So we won't be able to use a WASD trade? So prop accounts have some issues. For us, we like to trade bonds when appropriate. Okay. Now, if I were going to trade bonds, I would actually, if you want to use the lowest risk possible for bonds, you can trade ZF 0325. And again, this is a big unknown today because two reports. But the setup is 9:59:58. 9:59:58. Our bracket is 8. Position 1 is the 1. Position 2 is the 1. That means we're just using one contract for each position. My first target would be 8 ticks. My second target would be 15 ticks. My stop would be 15 ticks. And I'm just watching bonds. That's all. I'm just watching them. Apply. I'll do the same thing with the brackets. I'm not saying you can't use a reverse continuation on this report because you can. But the major breakouts that I would trade on this report would be gold, bonds, and the MNQ, which I am trading, the MNQ. If I were going to set up a reverse continuation, you could do it on micro gold. You could do it on MNQ. I keep the days to load to 5, Ray. You don't want to go bigger because it'll slow down your Ninja Trader. So it does matter. It is important. You don't want it to be more. You don't need more than 5 for what we do. You could use 3, really. 5 is fine. So it's up to everyone. Anybody can set up a reverse continuation. Let's say you set it up for gold. Okay. Click strategy, click JOBB version 11. Trade type would be reversal continuation. All you need for a reverse continuation is one position. So let's take one position. We'll do a target of 20 and we'll do a stop of 20 ticks on gold. So we're risking 200 to make 200. Scroll down, label it reversal continuation or reversal, whatever you want to label it. Apply it and okay it. And now when you enable it in the control panel, it'll give you your buttons, instant long, instant short. If the gold breakout, you wait for the gold. If you're not trading the gold breakout, then you could just trade your reversal continuation trade. And you can do that on any chart, okay? You can do that on any chart. It allows you to take a reversal trade or a continuation trade. So our one real trade is the MNQ. A 150 tick stop, a 40 bracket. We've got a gold breakout test and a bond breakout test. This is the kind of report that any instrument could move. You could get what we call a breakout for all. That just means anything can have a breakout, any instrument can have a breakout. But remember, our DNA is to trade the reports that give you the best opportunity for profit. And we're not sure what this particular report offers. We know it can move markets, but we don't know what the best setup is because they don't trade together often enough for us to come up with a great, perfect setup. So it might be that for this coming year, maybe we will only trade after the news on this type of report. Maybe we'll change what we do. It's not unreasonable. We could look for magnets and we can look for after the news. It's definitely not unreasonable. There's opportunity for profit, so they're worth having the trade room for them, if you know what I mean. These are reports that they really can move markets in a significant way. You know, it's not like some of the tiny Chinese reports that don't always move the markets very much for us. So the main thing I'll look at will be the MNQ. Very volatile markets right now. It was a pretty dramatic open, right? A lot of movement. This is the kind of reports where you could get out of control movement. So you want to keep that in mind. I'm not trying to scare anybody, but it's the reality. You could get out of control movement. You could get early release. You could get unusual behavior. So our brackets will show up in a couple of seconds. If the MNQ moves in one direction only, and I'm on the wrong darn chart. All right, so my MNQ worked, and gold and bonds were beautiful. Gold and bonds were beautiful. So maybe what's happening, honestly, is ISM and Jolts. Look at the news, first of all. Very, very, very big positive news. Very big positive news. Turning off my breakouts, turning off the breakouts. Very positive news. Should probably push. Here's what's interesting. The NQ continued its move down. We made a little bit of money on the NQ. We'll look at the video in a minute. Bonds and gold in particular, had a fabulous move. Gold had a fabulous move. Why did gold move so strongly to the downside? Because all the news was very strongly positive. That pushed gold to the downside. Now, I don't like to chase a short here because it's had such a big move. It would be a chase here. Okay. Now, the markets, the NQ, is not necessarily liking this news at the moment. And you'll have to listen. Excuse me. You will have to listen to what the discussion is about why the markets do what they do. You can't always just look at the results and assume you know the reason. Sometimes we just don't know the reason. Hang on. I love Rick Santelli. So there's a ton more job openings than expected. So maybe they're thinking the job market is too hot. Also, the PMI services was very hot. It just might be that the economy is too hot, too hot. All right. And sometimes when the economy's too hot, the markets don't like that. Let's look at the video. And I'm reaching a point where I'm going to be willing to take more risk on these reports on Jolts. All of a sudden, Jolts is acting better. It acted better in December. It acted better here. So we're definitely getting Jolts behavior that's acting better. So that means it may be worth taking more risk with the report. That's the information we look for. Let's look at the video. And people are checking in. Our regulars, Sander made real money on the MNQ. Larry made real money on the MNQ with 5 contracts. But look at the bond move. Let's watch the video. The moves were great.